you know Oender, right? I use Oender. Is the chart the same? Yes, right?
Sorry, what?
I use Oender broker. Is the chart the same? Yes, right?
It's almost different, the chart. As you can see, my chart that I'm using is this one. Is this one. And this chart is from Black Bull.
Oh,
But basically almost
oh,
all the charts are the same. Change a
oh,
little bit.
okay,
I'm using
okay,
another chart in order to make my
okay.
drawings again. Okay.
Okay.
Okay, so I'm gonna remove this. Okay, first of all, I'm in a monthly time frame. You know, very clear that we are in an uptrend, right? And
Yes.
here we make swing high, swing low, swing high, swing low, swing high, swing low, boom, made a new high, right? That is very simple concept. And this concept, even though we are in a monthly time frame, also you can do it, you can watch it in, you can see it in all time frames, H4, daily, M5, M15, 1 minute chart. All right. So it's
Okay.
the same concept. So what it's for me, it's very important to know which is the I'm drawing here in the line chart because it's more easy to see at very quick the swing high. So this is the monthly swing high.
Yes.
I'm placing my monthly swing high. I look it up, and this is my monthly swing low, right?
Yes.
And this is my monthly swing low, monthly swing high, monthly swing low, monthly swing high, monthly swing low, and this is the monthly swing low, the monthly swing low. And then we make a new monthly swing high right over here, monthly swing high. We look it up. We looked up this one. Okay. Now this is to I know if the price reach here, I'm looking for buys in this area. But for the price to reach here, it takes a lot of time, right? Right?
Yes.
Okay. But now we are making a mapping of the chart. And you have to understand that the chart it's what made people in the past. So you have a clue there. So what made the people in the past when for example reach this swing high, we don't know. We do not know, right? So this is a monthly swing low here, monthly swing low. All right. So then we go to 1 week. So in order to make a support
Yes.
and resistance, it have to make this 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 thing. Hold on. Okay, we have to make a support and resistance is this one. Support, a swing high, swing low. It has to be like this. This one, it's a support, okay, or resistance, okay. For example, if you
Okay.
okay, this is the how can I say the main base of support and resistance. Okay, so in the for example, let's go to the daily time frame. We have to we in the line chart we want to find something like this. Okay,
Okay.
okay. So we have here here, for example. we have uh, daily daily support confluence, because we have here the peak, and here another peak. All right, you got it. We have,
Yes.
okay, and this make daily support. Here was resistance, and here was the support in this area. Okay, so we know that in the 37,000, in this price level, we have a support. Now we're going to find another key level on a daily. For example, here we have a daily. Here was the push-up, it was a resistance, and this small peak, this one small peak, made a support. We have now the validation of this one. If you find like this, for example, like this and like this, let me make it like this, like this, like this, like this. For example, this is not a resistance. Why? Because we have a, we have to, in order to make a resistance, it has to has another confirmation right over here. All right. Do you understand me? Understood me?
Yes. The double top, right?
No, it's not double top. We are making a simple, for example, in order to be a resistance or support, for example, should be this one, like this and like this. And if you find in the
Yes.
chart only like this, it's not a resistance. It's not a resistance.
Oh, okay.
Okay, because in order to, or if you or you find it like this, this is not a support, because it needs another one to make it. Now let me erase this one, erase this one, erase this one. So you need to have a peak, and down peak, in order to make it a support. Okay, so this concept, we have to find it right on the chart. All right,
Okay.
so I'm gonna remove this, erase this. Okay, erase this. Okay, so in this case, based on that law, we have a peak here, and we have a tiny peak down over here, confirming this as support. For example, here we touch, here we touch again, support. Okay, all right.
Yes.
Now we are going to look up another key level, following the same theory. For example, here, for example, here, you don't have to be precise. For example, we have a peak, a resistance, support, 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 and this, even though in the line it's a very far away, but if we change the chart, we can find almost touch it. All right, almost touch.
Okay.
So you don't have to be very, but you know, in this area, more or less, it's a support. Okay, and this is, I'm going to put it like daily confluence support. I'm gonna look it up. Okay, we have our key. Why not? I'm not pointing here, because this is resistance, I need another peak run up here in order to confirm this level as support, but I don't find it right over here. I don't find it right over here. Only. So for me, it's not a key level. Okay. Let's go drop down to H4. Let's go drop. We are dropping down to H4. What are we seeing in H4? Okay. So we have here in H4. Here we have H4. Okay. We have support and we have resistance right over here. Could be right over here. We look it up, and you can double test it right over here. The price reached support, reached resistance, and boom, drop. Yesterday I shorted, and I was a good trade. Okay, so you have to follow up in the lines. Let's find a new support or new key level. No, we are finding right now a key level. For example, here, H4, support, resistance, key level, support, no resistance, and then support. That is a key level. And then,
So every time when I draw the levels, I must use the line chart.
of course, it's more easy in this way.
Oh, so don't use candlestick lah.
What?
Don't use the candlestick chart to draw support and resistance.
No, I don't use it.
Okay.
Okay, so which is the another key level? For example, here, another key level, we find another H4 time frame, resistance, support. We are watching now that the price is breaking the support, H4 support, which is not the other one, key level. Which is the other key level? The following the same rule here. Resistance, but here maybe find a support right over here. We change, and here we can see the wick of this one. All right. So this one is the next key level. And look, also here we see the wick.
Wait, sorry. So can I say that in order to draw the levels, I need to use line chart, and in order for a level to be considered a key level, it must be a resistance and support.
Yes, we're making support and resistance key level. We are only drawing our chart, okay, to find out support and resistance. We already find out daily resistance and daily support. This is a wide area. Also, we find the daily support here, and now from the daily we dropped to the H4 to find key levels on H4. Okay, so right now we are breaking this now, this price level, which is the other area that for logic the price is gonna reach, is this next key level. Okay, key level, sorry. Okay, and now we try to reach another, find out another key level. That's it. In H4, I'm gonna draw it in H4 from here, which is another key area that meets this thing. Okay, here, you know why, right? Because here support, resistance, support, support, support,
yeah,
and
but
here we have resistance. Okay.
so we draw the best line, right?
Yeah, we have to make follow that criteria in order to make a support and resistance. The same key level should make a resistance and a support. So that's but that
Yeah, but this one, right? It was protruding out, eh? Doesn't matter.
sorry, can you repeat again?
Oh, sorry, because the you know the US the word over there that line is higher, doesn't matter. The peak is higher, doesn't matter.
Yeah, no, doesn't matter. So
Okay, okay,
we are charting right now our key levels. We are charting right
okay,
now, and you can see this video once again in YouTube that I will send you the link.
okay, okay, okay,
Okay, so
okay.
don't worry. You can watch it many times as if you wish. Okay, we found out many key areas. Okay, many areas that is
Yes.
a lot of pips right over here. So this is H4. So you can see in the candles very clear that the key areas. Okay, very clear.
Okay.
Now you have to understand. Now is the most important thing is that the chart itself show you what the banks did in the past. Okay,
Yes.
okay. For example,
Yes.
for example, we know that in this daily support, in this key area, when the price reached here, make the price right skyrocketing. Here it tries, and then here it tries, retest, and boom, and then boom. So from this point of view, if the price reach in this key zone, which is the probability that the markets go up? We have a little bit more probability, right? In this case, right? Can you hear me?
Yes, can.
Okay. So you have to analyze what the market did in the past. For example, from here, we know that the price from this support, it reached up, but once again, in this key area, if the price break it, went up, went down. Okay. So right now, we are in this key area, in this support. Can you hear me? Hello, can you hear me? Hello, can you hear me? Hello.
Yes.
Okay, okay. Okay, we are now in this key area, in this support area. We know that in the past, in this key area, the bulls came in and pushed the market up, right?
Yes.
We know that from this support is the origin of, on this price level, is the origin of this push up, all right? So
Yes.
what is the probability that the price came down here, liquid a little bit, and then goes up? We have a little bit more probability, right? Because we saw it in the past. We saw it in the past that somebody or some company or a big bank place a huge volume to buys right from this price level, which is the probability
Yes.
that the price liquidate a little bit more here and then gets a support and then goes up. That is the key levels. You have to understand what I'm trying to tell you, explain you, is to show you the market, the chart in itself, show you what the market makers did on the past. So it gives you a clue what potentially what the market can do. Okay.
Yes.
Okay.
Yes.
So you just what I'm trying to say is here is the support. I'm going to place along. No. If this is a good place to place along, I'm asking you.
We need to wait for confirmation in
Well,
the 5 minute or 1 minute chart. I don't
okay,
know.
but you have
Am
to
I
see.
correct?
You have to see in no. You have to see in the market that the price reach this key level because this key level is the beginning of the first push, and this is
Okay.
the second push. If retest the second push.
Yes.
So
Okay.
what I'm waiting is that the market reach itself here, trying to liquidate this low, and then show me something around this area that the market wants to go up. Okay, because this is the origin. For example, here in the support, it was a good long and closed it here in the monthly swing high. Look it up. The market reached monthly swing high and dropped down. Retest monthly swing high and drop down. Okay, so you have to understand the chart itself. What the market did on the past. So
I can understand. Very good. You continue. I can understand. Good.
okay,
Okay.
okay. So we already marked the support and resistance. Okay. So okay, and then we are going to make for example the trends and analyze the whole market structure.
Sorry. Can you give me 1 minute? I need to go to the washroom. Very quick. One minute. Okay.
Okay, I wait.
Okay. Sorry. I'm back.
Okay, great. So, and now we are going to analyze the whole chart. Okay?
Yes.
Okay, we are in the week. We are in the monthly. This is what I do. This is what I do. For example, I'm just Fibonacci's and trend lines and everything. Okay? So I'm gonna show you my Fibonacci levels.
Wait. Sorry. So number one, I draw my monthly, weekly H4 levels. Okay. Okay. Yes. Yes.
We are
Okay.
making only
Okay.
key levels. So
Yes.
it's
Yes.
very
Yes.
important
You.
to understand where you are in a market. Okay,
Yes.
it's
You
very
can explain very well.
it's
Thank you.
it's very important where you are in the market. I know from the little lines that we draw that
Yes.
we are bearish because we are from the monthly swing high. The market is pushing down right now.
Yes.
So
Yes.
where's the other swing low of monthly? It's right over here, right? But the probability
Very
that
far, right?
is very far, months. So, but the important thing is that you knows very well where are you right now. So right now we are
Yes.
in this
Yes.
support that
Yes.
the market is pushing up right now. Okay, it's pushing up. Okay,
Yes.
it's okay. So
Yes.
okay, so okay, and right now we can make. For example, we are going to analyze the whole chart to make. I'm going to show you this. I'm going to use Fibonacci, and this in
Yes.
here's in English. You can screenshot when you see the video that
Okay. Yes.
I'm going to show you right now.
Yes.
And
Yes.
okay, so Fibonacci tool is very important to know to give you an additional confluence where you are located. So
Yes.
if for example we are if with the market retracement are at 38.2, it means that can have a potential Fibonacci extension to 224%. And also, if the Fibonacci retraces to 50%, we have a potential, also potential 200 Fibonacci extension. If the retracement goes 61.8, 70, 78.6, 80 point, we have that probability of this extension. You don't know what I'm talking about, but it's gonna make sense right now, and I'm going to show you.
Okay.
So,
Thank you for teaching me.
yeah, no problem. So also I also learned. Yeah. So we go line once again. We are in an uptrend, clearly uptrend, but we are day traders, right? So we are going to make
Yes.
here. Okay. Monthly, we are in this uptrend channel. Okay.
Okay.
And we know that when the market reach this high, make this high of the channel and then drop down. And right now we are also in this high. That's why the market is reacting to the downside. You have to understand that. In the
Okay.
little time frame, in the small time frame, reacted to this main trend line channel. The market break it, retest the break it, but it failed down. Also, once again, break up, and right now it's failing down. Okay, so that is for example, a wider analysis. All right.
Yes.
All right. Also, you can see a weekly can close candle with this engulfing weekly candle in the area of the resistance. This is another retest, can close candle on an area of the resistance on the weekly. All right.
Yes.
Everything that you know already, somehow right now is making sense to you. I'm pretty
Yes.
sure about it. Okay. So right now we go to the Fibonacci. Let's go to the Fibonacci. The Fibonacci, in order to the Fibonacci work, the Fibonacci it's the Fibonacci work. It should break. It should break one high or one low. For example, the market is making here a clearly uptrend, right? This is an uptrend,
Yes.
and suddenly, boom, the market break this low. Okay, that is another concept, that is change of character. but I'm gonna make it very beautiful. For example, no, I'm gonna make it like this. Here, 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 support, support, and then here, wouldn't make a new high, and boom, and make right. Okay, the Fibonacci is like this. Use Fibonacci. You know here that the market made a break this low. This is a Fibonacci retracement from the top to the bottom. Okay, it make a retest, in a 0.6, this area, 61.1618.
Yes.
So what do this tell us? If it makes 61.8, the tentative forecast of the extension is 161.8. So now we use another tool, the Fibonacci extension, made here to this low, to this 70, and we look up potentially the price can go right here in the 1.68 here. All right.
Yes. Yes.
So it's the same concept for these levels. If it retrace in the 38.2 here, can potentially go up to 224. If this case is a price retrace here, maybe the price will go down up till here, and so on. Each line, this is not mandatory and this is not a law, but can give you a forecast, right? Each line,
Yes.
it gives you a take profit line or done for the day, because we are not swing traders, all right? Also, this is in the downside. This is in the downside. This is in the downside. What happened to the upside? We are in the downside here. For example, here we are in the downside. We are in the downtrend market, and suddenly it couldn't make a new low and make a new high, and then retrace, I don't know, round over here, and you are here, right?
Yes.
You are over here. You know, for instance, that this high broke this high, right?
Yes.
So we can use the Fibonacci, because the Fibonacci can be used when you how can I say, when it changed the market structure, when it broke something.
Yes.
So so now we can use the Fibonacci. We can use here, and to see, okay, it broke this one. You have to wait. You don't care if it broke it or not. If you don't have to follow the market will have to come to you. So in this case, where it came, it broke one high. We were in the downtrend. Now it broke the one high, make a higher low. So what you're waiting for? The retracement. That's why it's Fibonacci retracement, in order to make you show you where it retraced. Here, for example, no, in the 0.618. You have to
Yes.
use the Fibonacci extension to see now where the market wants to, or probably wants to go, and probably wants to go right up to here, to the 1.68 of the Fibonacci extension that we talking about here. All right. So the key
Yes.
levels of the Fibonacci extension, because maybe it's reacting here, maybe it's reacting here, sorry, maybe it's reacting here in a point, hold on. Well, maybe it's reacting here in the 0.6236, but the most powerful key levels of the Fibonacci extension, it's 3.82, 0.5, 0.6. This area of this is the powerful Fibonacci extensions. 0.382, 0.5, 0.6, 0.78, 0.76. All right.
Yes. Yes.
Here it's not too much, but if the price retrace right over here, it's more powerful. Obviously, if the price can retrace here and it's a zero retracement, but it can make a new high. But it is a guidance, all right? Okay. So now I show you this one. I show you this one. And let me erase this one. So let's go to the charts. You can see that this video once again many times as you want when I upload to YouTube. Okay, what do we see here? It's the same concept. Fibonacci retracement, we make this low. We broke this low, for example, here. We make this high, broke this low.
Yes.
No, this high broke this high. No. And what are we find? One retrace to almost 0.786. Okay.
Yes.
What it tells us when it retraces in this area, it goes a potential extension of 127%. Okay.
Yes. You know you can teach very well. Yes, right. Okay, good. I understand.
Okay. Let's.
Fibonacci was very hard last time, but now I understand what you're talking about.
Okay. So according to the Fibonacci extension,
Yes.
127% is right over here. I'm sorry. Is right over here. All right. So the Fibonacci extension, it did its job. It's done. Okay. It retraced to the zero, this area, Fibonacci retracement, and it reached the extension to the 1.772. All right. So what happened next?
Okay.
So what happened next? No? What do we do next? Okay, we have to analyze. Our job is to analyze the market. Okay. So we have this low, we have this high, we have this retracement at 0.382, right?
Yes.
What tell us here when retrace is a 224 probability of the extension. Okay. So the market, according to Fibonacci itself, it's bullish. The 200% can be right about here, more or less, 200%, around the 65,410. That is too far away, right? Too far away.
Yeah, well,
In order to reach
yes.
here, needs to break each one of these levels. It's too far away, but it gives you some guidance. So it gives you some confirming this level, this monthly swing highs, confirming at this level of Fibonacci extension. And then we have another Fibonacci extension of the 0.5, and this area of we have of the daily. Look at that, beautiful. It's almost the same. Daily support with a 0.5% of the. That is we have here two confluences, the Fibonacci extension and the daily support, right? So we are in the range of this a super key level, and this one is another potential extension to reach. So the market wants to go up till here, but what happened? It's facing this resistance of the channel. In order to the market go up or down, it needs to have a retracement. It needs to have. It's impossible that the market just go up, or it's impossible that the market just go down. It needs to find a liquidity in the market. Okay. So right now we are in the. This is a general perspective. This is a general perspective, right? So
Yes.
let me erase this one because it's too far away. We don't know. This is a general.
Can I ask you? So when it for the extension, when it retrace to the 0.618, right? It will extend to 1.6 something.
Oh, you just draw. You just draw everything, and then you have to see confluences there. If there is support, if there is engulfing candle, if that area is a demand zone or supply zone, so the sum of every confluences you have to execute. If the Fibonacci retracement itself is not valid, for example, this in this low, right, on the weekly, it make for example this guy. This is a new high, but it's make this high. We have to understand where. Okay, we can see that the market from this low to this high, it retraced at 0.236 of this weekly Fibonacci extension. All right, this is a key level. That's why the market, we can see here, the market react with a daily support, monthly swing low, or swing high, swing low, and plus the confluence of the Fibonacci extension. That's why the market make it work here. Okay, we have to remember that the market is still bullish. The market is still bullish. Right now, the market's going downside, but we don't know. We don't know that the general trend is bullish. No? But here we have to understand here now. We have to go to the 4 hours here. Suddenly the market was go up, and then lose its power and make it this low, broke this low. Am I right?
Yes.
So we have to draw. We draw the Fibonacci retracement to see where is located, where it make this its retracement. We can see very clearly that it retraced on 0.382. What
Oh, okay,
what
okay.
the markets? So in order to use the Fibonacci retracement, we need the low needs to break the previous low, checked.
Okay.
The high couldn't make a new high, check. This high couldn't make a new high, checked. So
Okay.
where the high make couldn't make a new high? In the 0.328 to 382. Also
Yes.
confluence in the resistance. So you have two confluences there.
Yes.
You have a H4 pin bar. You have H4 pin bar. We go down to the 1 hour. 1 hour, it's making an also pin bar.
Yes.
50 minutes. 50 minutes. Look at this. 50 minutes make another pin bar. You know the Fibonacci level is here. 1 minute is the same structure. The 1 minute broke, then with this engulfing candle, retest here. Your first short could be here with 8 pips stop loss and target whatever you want to target. Or you just wait that the market here made a retest on the 3.8682 resistance. Boom, you can make another short here. When you are there, your stop loss above this guy, 18 pips. That is nothing. Where you now? Okay. Also, it comes a retest. Always the markets want to retest the area where you. So that's why you have to keep our targets. No? You can do here 142 pips, whatever. So you have to many opportunities to go short right now here to the sell limit, or right over here, tight stop loss, or here, or once again here, or once again in the daily break of the daily support here. You know very well that in the higher time frame that the Fibonacci it's make you confluence, give you confirmation that we are in the 3.82 confluence with a resistance, breaking right now the daily confluence with a 0.238, 336, and go down. Where, according to this, if the market make a reaction at 3.82, where the market wants to go? To the 224%, right? Here. Okay, let's make our job as for traders. Let's make this one here, 3.82, 200%. Oh my God, we reach it. We are here already.
It's like magic.
Okay,
Oh.
so you couldn't close right over here. This was my analysis, today's analysis.
Yeah, this this shot is a very good shot, you know. It's like it dropped so much, yeah.
If you can see,
And
this
look at
was
Nasdaq, right?
what?
Yeah.
This was
But
well,
Nasdaq Nasdaq never dropped this much, you know.
that's why I love USA.
You
USA.
you 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 I just curious why you feel US30 is because is it US30 is easier so called to
No,
analyze and
it's
predict?
very it's very hard. It's very hard. These weeks can scare you out. Or if you do not
Uh-huh.
place your stop loss in the right place, it will stop you out.
Okay.
All right. So you have, for example, I'm only teaching you right now that's Fibonacci and the Fibonacci, how I use Fibonacci's. Okay. So, for example, now
Okay.
now how I use demand zones. For example, I use demand zones. I use now weekly. I use demand zone for the weekly, for example. Hold on a second. Hold on a second.
Okay.
Let's take it. Yes. Okay. Okay. So we are going to demand zone. I draw my demand zone from the daily for H4, H1, or M45, depending on what I'm seeing in the market. Regular purposes, I make from H4 or daily. I'm going to the daily where it's the demand zone or supply zone. All right. And
Yes.
here to the daily, the demand zone or support is even though we are in the daily, is the same candle of H4. Imagine that is H4 or H1 or whatever. You know that the basic concept of the demand zone or supply zone is in this case, supply zone is this one. It has a lot of volume
Yes.
versus the previous one, right? So we
Yes.
draw in the body of the candle
Yes.
to the wick of
Yes.
the previous candle.
Yes.
We draw. This is the daily demand zone, and we draw all the way. We mark it down, supply and
Okay.
demand.
Sorry. For this supply zone, right? We don't draw the
Supply.
whole big red candle, is it?
This one? What?
Yes. 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 Yeah. The just not the one you draw. Yeah. We don't draw the whole red candle, is it? You draw the one that started you draw the from the
No, you
green
have to
small
draw.
candle.
For example, I spotted here, but the
Yes.
current one is from here. You can see the most recent one is from this. This is a new one, supply zone, and I draw
Yeah.
until here. Okay, and I
Okay.
mark it daily. I go down to the H4. I go down to the H4, and yeah, you can make it smaller one to the H1 if you want, to the H4 to make it more narrower. No, sorry. You can do, you know that this zone, from this price level to this price level, it's a supply zone.
Yes.
Also, H4 is from here, this H4, I put it here, H4. I know that this is my supply zone of H4. Okay?
You will draw the most recent one, is it?
Yeah. For example, this one I removed, for example. But this is for a reference. I don't expect that the price reach here and drop down. I do not. All right. This is just for my reference. I have to do my analysis. For example, okay. Right now we are here in the daily. The daily, we can detect a little bit. Where is the demand zone from the daily? I cannot see it. On the weekly, in the weekly, in the weekly I see, for example, this is weekly supply. Now I will show you why it's weekly, because we are in the weekly time frame, and I'm making this drawing based on this candle and this push up.
Yes, yes.
It make
I know, I understand.
a demand zone.
Yes.
Okay. I will show you everything that I know.
Yes.
So go to the day.
Oh,
So this is a zone that whatever it is in this zone plus in this daily support, the price go up, and then below this zone, I was looking for short. I did a lot of shorts here. Above this zone, I did a lot of longs right over here. All right.
okay.
So even though that the market is dropping, maybe the market wants to. Well, we already know what it did. It reached that Fibonacci extension, but maybe it wants to go down to retest this area. Maybe, I don't know. So what do we need to know now in order to go long? Okay. And we need to find a demand zone. A demand zone. Where is we know in the market that from this price level in this daily wants to go up. It broke, wants to go up. Here wants to go up, went up. So I'm expecting that the price around this here, I'm looking for longs, and maybe some Fibonacci retracement wants to tell me to go up. We need to find how can I say it? Demand zone, next demand zone. Okay, and daily I cannot see it. Let's go to the H4. H4, look at this. H4. We find here a supply zone, H4, right? Also, we find here another supply zone, right? H4, right?
Yes.
So
Yes.
I draw here
Yes.
until here. H4, look at this, all this area. Supply zone
Yes.
and demand zone also can act as its support and resistance.
Yes.
It makes sense?
Yes.
Okay. H4. So what I'm waiting here, it's, I know that the price went down from this supply zone, and now we are in this demand zone, right?
Yes.
Potentially, I can look for a long, right? But I'm not. I'm just not. I'm not doing it. So what I'm looking for is on the daily. where is our swing low, swing high, right?
Yes.
Okay. We know right now that we are down below this Fibonacci area. Where is the other key area to retrace? Here, right? On the 3.382. That is very close to this H4 support. So I potentially could look buys from this area. Potentially. I don't know. No? But
Wait. You will. Sorry, you will not buy at current level because now it's at the demand zone. Also at the one daily time frame, you will not make a buy here.
no, because it's a demand zone, but I have to see if the bulls are coming. So I have to see, for example, right now we have this
Okay.
H1 swing high, right? This H1 swing high
Yes.
and this H1 swing low. Okay.
Yes.
In order that the market, remember that the market make a push, it needs finds liquidity in the market. Okay.
Okay.
Where is the liquidity previous in the market? This high, this low. So it needs to break this low, find this liquidity, and make something that tells me that the market can go up again. This is H4. I didn't place it. Look at this. This is H4. Maybe I can find, I don't know, maybe push. I don't know. Frankly speaking, I don't know. I just know that it needs to liquidate this to find liquidity and maybe goes up, or liquidate this and push strong, very hard to the downside. We don't know. Frankly speaking, we don't know. All right. So we just we know that we are in a, for example, in H4. Well, let's go to the daily. In the daily candle, we know that we are in the demand zone in the daily candle. Okay, but we know that we are below the master trend line of the channel. All right. So it's very tricky right now. It's very tricky. It make a new high, but it's not very strong. Maybe wants to find liquidity right over here, and the retracement of the 0.5%. That here we have the H4 support, but it's very close to this demand zone. So maybe tomorrow the new trend is going to push right down here, maybe push down, confirm this as resistance, not a support, and then goes up. All right. We don't know.
Okay.
We don't know. We just do not go to buy right now. I'm waiting to go to buy, but I'm waiting to a confirmation, something. All right. So right now, we know that this is the daily swing low, daily swing high, right?
Yes.
We know that from here to here, if you want to go to buys, let me push this one here. We already below the previous chance to go up. That is a 0.786. So we already broke it. So maybe the price wants break this low, because otherwise should be, we can see. Let's go to 15 minutes. We saw that the market wants the bulls came in and one wants to go up from this Fibonacci level, but the bears were more stronger. Okay, right now we are in the key H4 zone that maybe the bulls are trying to come in. The market somehow are making this trend, right? Maybe wants to break. If break this high and then retest these lows, I'm gonna maybe potentially go long from here, or maybe the price will liquidate this one. I gonna wait that the price gonna liquidate this H1 swing low, H4, and then looking for long opportunity from here. From here, liquidate these longs, make a new one, consolidate here, broke, and then retest, and then go up. I go up here. This is my plan. You have to imagine what the market can do. Okay?
Okay. Okay.
Yeah, there's another way. You have to use your imagination. And if you place, you know for a fact that the market break this low, right? It's gonna keep going lower, right?
Yes.
So we as a
Okay.
traders, we cannot control our profit. But we can control. We do control our stop losses. Okay.
Okay.
So if you decide, so for somehow to place your long here, it's the same case. Your stop loss should be right over here, because if break this low, the market will go to this, no, to here. But I prefer that break this low first and then show me something that's go ups and place my long or limit order or stop order right on this support, and tight stop loss from here, or a bit more pips right over here, because I know that this break me this stop loss, the market will go down. All right. So, for example, in 1 minute, look at this. The market it's start making consolidation right over here. This low broke this low. So, for example, maybe this is a potential long. Let me check it out. Let me check it out. In 1 hour, 5 minutes, it's a break of this counter this wedge. But what I don't like in the higher time frame, that it needs to liquidate this low. So, and the market is still bearish. All right, the market is still bearish. We use H4. H4. We use a Fibonacci. We hold on. Look at this. To this high. To this low. Maybe I will look if it breaks this one. I don't know, frankly speaking, I don't know. Yeah, already this retracement already reached the target. So what we need to do is to know if this support level is gonna to hold. I see, for example, if this candle break this high and then we test this, I will go to the upside. Where I can is a low risk to place my order, limit order around here, stop loss here. 1 minute. 1 minute. Oh, already the traders made their job. Place a limit order here and the stop loss here, and the market it's going up already. Okay, but I will wait to break this high and then to see what kind of setup. Maybe it make a double bottom or something like that. All right, you have to be very patient, very patient. What market it's doing right now? As you can see, it make a double bottom here, M1, it broke, and then confirm the support once again, and then goes up. What do we have in M5? M5, we have that already broke this trend line, and you go up. Okay, so I'm just.
So is this consider a reversal already? No,
Yes, it's a reversal.
not yet.
Yes, it's a reversal, but for example, you have to, for example, in this one, for example, for me, I'm not going to the trade because it's already too late. The market is going to close or whatever. I don't know. I just know that, for example, this one, for example, this weekly. No, daily. In daily, this is the swing low, swing high, swing low, swing high, right? Let's make
Yes.
daily swing high 0.786 retraced already. Is 0.786. The extension is at 127%. Where is the 127%? It's right over here. Is the target, potential target, in the 41,000. So here we have a confluence of the 0.68 of the Fibonacci extension. That's why the market it's already reacting here in the 7 whatever. That's why in the M1 minute the bulls are coming in the. So you have confluences. You have demand zone, you have Fibonacci extension, you have support. Maybe here it's a good setup for goes to longs. But the only one that I like is that we have this H1 this week that you can see here very clear, this week that it needs to liquidate and find its way once again to the upside. So that's why I'm gonna pass for trade today, because the other level is this 0.5% of the extension, Fibonacci extension, and the support line. Now, I'm gonna teach you fair value gaps. Fair value gaps, very important to place. You know what is fair value gaps are?
I don't know.
Yeah.
But you can teach me. I want to learn.
Fair value gaps are basically, it's okay. A healthy market believe it or not, is this one. Like this kind of moves. Like go up, go down, go up, go down. Let me give you 4 hours. A fair value gap, for example, a market.
How do you spell it? I never hear before.
FBG. Fair value gaps or imbalances.
Okay, I understand. Okay, I understand. I heard before.
Okay, we know here that we don't have any gaps, but we do have a gap here that is fair value gap. H4 fair value gap. In the drop down, we know that it leaves behind a fair value gap that it needs to fill in time. All right. We know that here that sometime in the future the market needs to fill that imbalance. Okay, we don't know when.
Sorry, is this like demand? No, it's not.
No, it's a fair value gap. It's a fair value gap. It's a for example, how can I say?
How do I is it like a sudden movement like that, something like that,
It's a what?
or strong green candles or strong red candles, something like that.
I don't understand what you're saying. What? No. Fair value gap. It's a gap in the market.
Oh, okay.
Okay, I'm gonna show you right now. In a fair value gap, we are in a H1, but it's a gap from this. It make a push up, but it don't have a retracement. Do not have a retracement. It's only buyers where it's present, no sellers. A healthier movement, it's buyers, sellers, buyers, sellers, buyers, sellers. But this is only a buyers. Also, it's the same concept for us. Okay, so we are in the we are in the M5. So in order to mark very good the fair value gaps, what I use this tool, fixed range volume profile from this high. No, sorry, M3 in a smaller time frame, M3, for example. To be more precise, where are the fair value gaps? Okay.
Yes.
Here, for example, I don't like this one because you have to do many times. This one here. Okay.
Oh, okay. I understand what you're talking about.
Okay, we know here, for example, through this impulse, the left side is buyers and the right side are sellers. So we know 0, 0, 0, 0, 0, 0. There's no sellers in this side. So we mark there. From the big zone, we are now more like a sniper. From here to here, and that's it. Okay, we know that it has a fair value gap. Also, from here to here, it has also another. Actually, all this is a fair value gap. Okay. It's a nice fair value gap. I mark it here like a FPG. So okay. 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 Look at that. Also here it has a variable gap from this move to this move that
Yes.
already the market filled. Already the market filled this gap. Right? That's why I have marked it here in my chart. I already marked it there. This is my analysis.
Do we draw this on which time frame?
M3
Only draw
minutes.
on M3. Oh, cannot draw on other time frame, is it?
Yeah, but in M3 and minute 3 is more precise. But
Oh, okay,
for
okay.
example, you can do daily. You can do daily. In a daily, you can see very well. For example, let's go to the other chart that I'm making. On the daily, you can see that we have here an FPG. All this week to this week, to the daily week, we have another daily fair value gap. Maybe the price will fill this fair value gap and found support right over here. I don't know, right? We don't know, but you have to draw it.
Yes.
You have to draw it, okay? And but right now we are in the H1. We already feel this gap that we have visually very clean from here to here. We already feel, but the market didn't care and it's dropping down. Maybe the market are looking to fill these gaps over here, right? And what do we have right over here? We have Fibonacci extension, we have support, we have another fair value gap, and somehow the market can react in this H4 demand. We have another demand here. Right over here. If the price do not respect this demand, maybe we'll find support in this demand, filling this fair value gap, and maybe can react this from here. This demand H4. All right. And what do we have in this area? We don't have nothing of Fibonacci extension, nothing at all. So maybe we have another fair value up right over here, right? We have another fair value up right here, and maybe we have another H4 demand here. Look at this. So maybe the price will fall down right over here, react to the 0.382, filling this gap, finding support, finding 3.82, and from here go up. Maybe we don't know. So that's why it's very important to to know gaps. And if go up from here, it will fill all the gaps that it left in the drop. From here to. Okay. So, and from here, also another confluence on from here. Okay. So if the main support obviously is this one. This is the main support. From here came right over here and shoot up. Right? Shoot up.
Yes.
If the price goes from here, I'm looking for longs, obviously. I'm not looking for the break. I'm looking for longs. But the price from here to here, it's a long time to go. So right now, what we are looking is look is swing low, swing high, swing low, swing high. If this price break this low, maybe from this swing low, from this swing high, I could looking for a potential long in the it's hard to tell because already broke. It's already broke. It's respecting this swing high, swing low. Also, but okay, let's look this daily. Also, you have to mark Monday high and Monday low. All right, because gives you guidance where the markets it's going. For example, this is Wednesday. This is Monday. So this Monday high, it's Monday low. That's it. So on Monday this week, the market trade between this range. Above this range, I will looking for buys. Below this range, I would looking for sell. Because it's
for every Monday, every week.
Yeah, every week. So it's like a guidance to you.
Okay.
It's a guidance to you. You
Okay.
it's like the iPhone. Oh my God, the iPhone this week opened, the highest price was $100 and the lowest price was $90.
Okay.
So why you? So right now I'm looking that the price is below $90. So why are you looking for to buys? You're looking to sell, right? For logic, for judgment. Because
Does this apply to every week? Every week.
this applies to every week. This applies to every week, for example. But it's not a law. You have to judge. You have to make an excellent charting. All right. Let's find another day. We have this Monday. This is a Monday high, previous high. Monday high. This is a Monday low. What happened? That the price broke the Monday high, retraced, and then the people, all traders were buying the stocks because we broke the highest price of Monday, right? It gives you a guidance. If the price goes down, for example, let's go another day. Another day right over here, another day, Monday, Friday, Monday. This was Monday. Higher, Monday, low. The price broke the Monday low. Boom. It traded below. Once again, traded below. Here is a fake breakout. And right now, once again, we broke on Wednesday. This is the, it was between this range. Okay. Only give you like a price reference. It's not a law. All right. So right now we are trading below Monday's lows. So below supply, below Monday swing high, below daily resistance or support. Why are you looking for longs if we are below everything? No, you have to use your own judgment.
Okay.
Why are you looking for longs here if you're okay? The previous day broke very hard with big volume below Monday low, below monthly swing high. So why are you looking for longs? You're looking for shorts from here,
You know you're very smart. Okay.
right?
Okay.
You're looking for shorts.
Yes.
Whatever the shorts give you,
Okay.
right? Whatever the shorts
Wait,
give
wait,
you.
this is recorded, right? This is recorded, right?
Yeah. I will send you. This is a logic thing. What I'm trying
Okay.
to tell you and to teach you is not just looking for demand zone, I have to buy, or supply zone, I have to sell, or pin bar, I have
Yes,
to
I
buy or
get that.
sell.
Yes.
You have to
Yes.
understand
Yes.
where are you located,
Yes.
where are in time.
Because I always wrong, you know. I always buy when it's demand and sell as supply. That's why I totally very wrong. Totally wrong.
So this is how you understand a logic approach to understand the market. All right. So that
So Monday is the key. Okay, okay.
it's one of the key levels is to give you a
Yes,
bias
yes.
to you because for example here for example here I think uh, yesterday or 2 days ago I placed a buy around here more or less. My stop loss was here, and I was looking. My target was from the Monday low to the Monday high, right? But I closed this one with trailing stop was around here. That was my trailing stop from over here, and I didn't make much, only 29 pips. That's it, and that's it because sometimes the market on Monday, for example, make a high and low and then retest that high again and from drop or for example here from here from here from the Monday low to this resistance, it is a beautiful 110 pips. That's it. I was in the 110 pips, but I wanted to fill this gap that you can see right over here. I wanted to
Yes.
fill this gap, but the market react on resistance and no here react. I want to, my target was over here, but close me with trailing stop right over here, 40 pips something. It is what it is, but you have to, that's why you have to analyze very well the market. So for example, just yesterday I make the short Yesterday, I knew that even though that we were above Monday low, but I knew that somehow the market in H1, you have to see all time frames. In H1, react here, and I saw it yesterday. But it closed me at break even. I enter my short here. Look at this. Yesterday I entered my short here. My stop loss was over here, and I was looking. This was my target. This is yesterday. This was my target because we have here a demand zone, right? This was my target. But the market closed me a break even yesterday. I was so pissed off. I made a mistake. I made a mistake to reduce my stop loss to break even. So here, close my trade and then push down. So it is what it is. because I saw this big reaction right over here, so I decided to maintain put me in break even. It is what it is. All right. So it's psychology thing. But look at this. Look all the money.
You know, I know. I tell you this. I think this happened to a lot of traders, but it's actually like because when you tell me, I can understand how you feel. It's normal. We all experienced this before.
Yeah,
You know what I'm trying to say.
but also we have to understand that this is a probability. Also, if I didn't place, it happened to me many times that I stopped out a lot of times also. All right, but you have to manage your risk. You have to invest less. Okay, how you manage your risk? I will show you my profit, how I am profitable. All right.
Yes.
So the only thing that we can handle is our stop loss and profit, right? Our
Yes.
our stop loss risk, our profits we do not handle. We cannot manage that, but because, for example, because what I'm trying to say is that I know that if I place a long from here to here, I don't know. I really don't know if the price gonna reach right over here. This is the profit that I can forecast, but I cannot control it. What I'm very sure is I can control my stop loss. Where I put my stop loss is big or small or right or whatever, right? That is, how can I control those? How can I control my stop loss? Okay, I already teach you the how can I sample the Fibonacci. But in this case, the Fibonacci was here, right? We know that we it's. I want to make it more. My hand is sorry, because my mouse is very big. I know that here is my resistance, right? I know that in the resistance, it's very close to the Fibonacci retracement, even though that we have a probability that we have to fill this fair value gap right over here. That I can see it right over here. You have two options. You wait. You have to wait. You believe me. You have to wait. You have two options. Be the first of entrance or be the second to entrance. What I mean about that. If you are the first to entry in a trading, but you have to backtest it a lot. If you are the first to entry in a trade, your stop loss, it's very tight, or your loss, it's very short, it's very less. If here to here. Also, your profits in this small range, your profits very big. This is M1. Based on your analysis that we have here in the past, when the price reached to this resistance, it shut down. The probability is that the price wants to kill this liquidity, make a new high, and then make a retest that did here, and you go to the retest. Stop loss here, it's only 7 pips stop loss. You know for sure that the price pass across this high, it's called up. So for 7 pips, it worth the risk. Instead that if you go for the confirmation to break this low, then all traders do break this low and have this amount of pips of a stop loss.
Yeah, I know. But yeah, I know. But you need to be very skilled. Yeah, I know what you're talking about.
Yeah.
It's like
Okay, you have to
you
backtest
know
it a
like
lot. You have,
US.
yeah, I know. You have to backtest it a lot. But in a moment that you place a trade, you have to respect your stop loss. Okay. So
Yes.
I was tired to lose this amount of money, and I only do this tight stop loss. That's what I do.
So so do you look for confirmation in the 5-minute candle? No.
This is also
You will see the
also
red
this is a look.
is
We are in
going
the
up.
5-minute candle. We have a very
Yes.
almost engulfing candle here,
Yes.
right
Yes.
on resistance. Also a can close candle. It's a
Yes.
this 5 minutes candle close above, yes, but the full body couldn't close above. The next body close below,
Okay.
close below.
Okay.
This is 5 minutes.
Yes.
This is 5 minutes.
Yes.
All right.
Okay. So it's because of the red bar, right?
Yeah, it is a can close candle. The
Okay.
previous candle close above, yes. You have to wait. You have to
Yes.
wait. You know that you are in the resistance. You know it. You have to wait for the next candle how to close it. How the next candle closes? Closed below the. For me, there is no need to wait more. Boom. Let's go. You know that is in the Fibonacci almost area and everything.
Oh yeah. Okay.
Okay. Also, this is another. But what I do is, for example, imagine. No, let's 50 minutes, or let's do 5 minutes. Let's do 5 minutes. Okay. Let's go the short. You enter here for the break of this low. You are very sure that it break this low below Fibonacci 3.382. You know for sure that the stop loss, if the price go up above this high, your trade is wrong, right? You have a lot of confluences
Yes.
here. We have resistance H4, you have Fibonacci kill area, you have can close candle right over here. You have a very price action here that also react to the Fibonacci level that is here. Also, that that from here is reacting to this level. From here, short. From here, short. From here, what's going to happen? Short once again, right? That market is giving you clues, glimpse of what. That's why you can wait. You can wait. Oh, okay, what's going? Well, even the market's pushing up, but where is going? But where on key levels is reacting? Okay, in this reacted, in this key level, in the Fibonacci, boom, short. It reached resistance, short. Once again, Fibonacci, short. Once again, couldn't can close candle, short. Once again, Fibonacci, short. My God, if you don't short here, something is missing, because you have to short here, 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 here. The market is also give you inverse head and shoulders. Look at this, inverse head and shoulder. All right.
Yes.
All right.
Yes.
Short, 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 short. Okay.
Yes.
But what I'm not talking about is that this is the pattern. Okay. What I'm talking about is the risk management. Okay. So your risk management.
Yes.
So it should be the US30 is moved in average per day 100 pips, no more than that. Average. Sometimes it moves 500 pips like today, or 150 pips like 150 pips in some days, or 50. You have to know the Dow Jones, in this case Dow Jones, a good trade, a really good trade is from 30 pips. More than that, you have to think about closing. If you are in the 100 pips, close your trade. Close your trade, because the market can go against you. Okay, 100 pips. Believe me, it's a pro trader thing. Okay. So that is okay. So from here to here, your stop loss, you invest 1% of your capital, right? Approximately. Is that a normal way? Here you have 60 pips. That is a lot. You have almost 2 to 1. You have 2%, right? But I'm not going to explain you that. What I'm going to teach you is that, look at the possible loan. Let's see what's doing the market. And I can go. I'm waiting to liquidate this loan, these lows. I can make a long position here. Buy limit here. Let's do it like this. Okay, let's do this. Okay, I'll explain you this one. Never of your trading career, never invest 100%. No, not 100% of your balance, but the full 1% over here. Or if you place of your trade is $50 or your trade is $1 or $10, risk. Never place. Let's talk about percentage. Let's say that your risk is 1% of your stop loss, right? Okay. Your 1% should be right over here. All this area should be your 1%. Obviously, your entry size is more lighter or less heavier. I do 100 pips. My full size for stop loss is 100 pips. My stop loss. Let's talk about me. Let's talk about me in order that you understand. When my full size, 100 pips or 120? 120 is my full stop loss. For me, 120 pips is more or less $1,000, more or less. Okay, for me, that's what I
Okay.
do. But but I know that if the price break this high, I'm out. I'm fully out. So what does it mean? This is my hard stop. This means that I do not lose $100, $1,000. I lose $300 here because it's 32 pips. But the entry size is for $1,000 power. I don't know. So what I'm doing is my power size is $1,000, but I do only invest maximum $300 of stop loss, or whatever the stop loss is. I am very sure that the stop loss is the price which here, above here, I'm out, but I am only risking $300 to make potentially more than $1,000. All right. So apply in your case, if your size is $100, you decide to put it here. You make your stop loss right over here, more than 100 pips, $100. But you open your size from here to here. You open your size heavier of $100, but you only risk I don't know, $30 more or less. All right. For example, if you it's the same concept of M15 or whatever you want to do. For example, here, for example, you want to go to the short, right? You open the short below this low, break of this low, but your full size is until here, but your hard stop, you know that for sure that if the price goes up again more than this high, you have to go out. You have to quit. That way is hard stop. Hard stop right here. You lose the 50% of your entry, and that's it. Some traders go from here and respect all the way around here the stop loss, and they
Yeah, that's me.
wait. Dude, if you know that it broke this guy, has a lot of possibility to keep more higher. Do not. So what I mean is, you open your full power of $100, but your hard stop is $50 in this case. No? In this case. All right. So so that is for me. This is very tricky to understand. This is very tricky to understand, but did you got it? The main idea?
Yes. I need to watch again, but it's like, but I understand what you're talking about. It's like you're very clear. It's like a lot of things. Like basically, it's like the key thing is that I think got six key thing. The first one is I need to know the money swing high H4 and H1 swing high. Then I need to know the supply demand zone. Then also the FVG, and then the Monday high and low,
Yeah,
and then
I teach you a
I
lot
need
of
to know
things.
about
I
Fibonacci.
will Yeah, I will upload this video and you can watch it once or again, once or everything again, because it's very complex to understand it. But you, but basically I show you the blueprint of how I trade, the blueprint on not only how I trade, the blueprint in what all traders do to understand market structure. Okay, and risk management, it's very important. The risk management is very important. So as I told you, I want to insist you again. If you're going to long from here, for example, you're going to long from here, right? I don't know. Let's do something long in a short. You're going long.
Right? Sometimes, right? Okay. Like is this the first time that someone asks you for help?
No, this is many times I help a lot of traders in the chat room that the actually I'm gonna send you the video. They help a guy from I don't remember from Europe, but I don't remember Bulgaria from Bulgaria. I send you the different thing.
Can you send me? Can you send me everything? Because I really want to learn. It's like I'm like taking really very long to learn. I just don't know why I'm so slow.
Yeah,
It's just
look at this. Look at this. This is
but I study a lot.
yeah.
Yeah,
So for,
I know.
okay, but the most important thing, what's your name again? Because I don't remember.
Rebecca.
Ah, Rebecca. So the most important thing is your position size. Okay, I'm gonna repeat again. And for
Yes.
example, you have to be very tricky about your entries. Not give your full stop to the market. For example, you have to calculate very good your lot size. For example, okay. For example, if you're taking this trade in 1 hour, in 1 hour taking this this is very beautiful trade. You are in support. 1 hour broke this guy, right? You do not give the market the 100% of your stop loss here. In order to open this size, you have to open this size thinking or making the calculation of the money that your real stop is right over here. All right. That is how you open this lot size. But if your hard stop is here, it means that you open this stop loss. The full stop loss is $100. The full stop loss is $100. But if it stops you here, it's only $50. But you open a size with a power of making $100. That it means I don't I don't care about the RR. That it means that here it's making 2.3 R. No, you don't have to care about the RR. You just have to know about the pips. You made 564 pips with just investment of, in this case, 120 with $50 or 129 pips. Okay, you are making 4.3 DR. But I don't care about DR. I just care when I reach 100 pips or more than 160, I'm done. and close. Of 50 pips, I'm done. Or whatever. My longest trade, it was almost 300 pips. That is my longest trade. But you can lose a lot of money also, or close you. I was one day $4,000 in profits, and I let the market close me at break even. So you have to manage. You you have to control your greed. Okay. So this is what I told you is the key of lose less and earn more. Okay,
Okay.
that is the key, because if you
Yes.
do the traditional way, you invest here and close you 100% stop loss, guess what? You lose 100% of your stop loss. So the next day or the other day is gonna be very hard to to catch profitable once again. But if you do this, my method, if you lose, for example, here $50, okay, here $50, okay, you lose $50. Let's go to the next day. The next day, you do the same, but you earn a lot more. Did you understand the concept? Understand the concept or no?
Yes.
That is
Yes.
the most important key. This, well, so far I do not see anyone teach this this thing. So I learned this thing because I lose a lot of money. So that's why you have to
Okay.
you have to learn this.
Thank you for taking time to thank you for
You're
taking
welcome.
time to teach me
You're
because I
wel-
know
yeah, you're welcome. I'm gonna
because
leave you.
it's your trading hours. And okay. Thank you so much. Are you
I
hungry? You need to eat your breakfast.
No, not yet. I do fasting. I do fasting. So I'm gonna leave you. I'm gonna send you the link of the YouTube link, and to in order that you can
Yes.
watch it
Thank you so
again.
much.
And also I will send you the link of a partner that I teach also this thing in order that
Yes.
you catch it.
Yes.
So basically,
Yes. Thank you so much.
basically, um, you have to do your charting very well in order to make your own judgment, and
Yes.
that's it. Okay, that's it.
Yes. Yes.
As you can see here,
Okay.
in order to close this one, and you can see here, we thought that the market's going up from here, but the market's going down. So even though we are in the demand zone, the market do not care. The market, you have to wait. You have to wait a lot to liquidate this lows, or maybe fill this gap, or maybe reach about run over here. Okay. Okay.
Yes.
Okay. Take care, Rebecca. Have
Thank you.
a good night. Bye bye.
Yes. I thank you so much. I appreciate your time.
Take care. Bye bye.
Thank you.